What is going on, guys? It is your boy T-Bay here from SMB coming at you, SMB Nation. Um, we got a nice little market update video. See if I can get my camera a little more in frame. Sorry, my hair is such a mess. I didn't have time to clean it up. I had to get this video out for you guys. We've had a big day today in the stock market. Um, we have got some news today that would appear in any other universe to be good news, but is actually bad news today because up is down, down is up. We want to see bad news from the economy. We want to see weakness in the economy. We want to see unemployment going up. We want to see buying going down. We want to see all of these bad things happening to the middle class so that the Fed eventually realizes that they're over tightening. But we unfortunately got good news, which is bad news. We got our services, our ISM. That's right. Yeah, ISM non-manufacturing index, which is basically a demand from like factory orders, how many people are ordering goods from factories, that kind of thing. And that had a bit of an uptick in November, which it has been going down, down, down with the rest of the economy. So we're seeing an uptick in that, which means higher demand, which means not good. That is ultimately what the Fed is trying to kill. They're trying to kill demand. I've talked about this a million times. I know I'm like a broken record, but just the same story this entire year. It's the only thing the market cares about, so I'm forced to talk about it. But this uptick tells us that there's still strength. There's still that momentum in the economy, and it is still just not going down. And the Fed is trying to do everything it can to make it go down, but it just ain't happening. So that is why I believe we're getting this red day. And on top of that, I've been talking about many things. So that's the fundamental reason I believe, but there are technical reasons for this red day, I believe. So I've been talking about, I think the VIX is telling us the entire story. I've been telling you guys, when the VIX is down around here in the 20s, that is typically a good time for you to take profits. If you bought when the VIX was up in the 30s, and then you sell in the 20s, you're typically making money. And when you short when the VIX is in the 20s and you cover when it's up in the 30s, you're typically making money. It's done that so many times this year. It's done that just an insane amount of times. It's done that here in February, here in March. If you would have shorted here in March, April was a bloodbath. Anyone remembers that? Here in August, same thing. VIX came down to 20. The S&P was at its peak. It hit that 200-day moving average. It started to crash. And when the VIX broke out of this falling wedge, it just shot up like a cannon. And look at this. We're right here in this new falling wedge on the VIX. And sure enough, right there on Friday, we closed right there on Friday at the bottom of that falling wedge. And look at that. We blast right off of it. Huge gap on the VIX. And now we are up almost 11.5, almost 12% on the VIX today. And we're running back up to the top of that wedge. And if we break out of that, it's going to be a complete bloodbath, I believe. So we're already getting bought out of this demand zone on the VIX where buyers have stepped up. Not real buyers, but imagine this is just a stock. People don't buy the VIX. You can buy options on the VIX, but anyways. Well, I guess they do that. Yeah, VIX futures, whatever. But you always buy in the 20s, it always shoots out of the 20s. That's just been the trend. You don't fight the trend is your friend, and that's exactly what it is doing today. If we look at the S&P 500, SPX, we are just collapsing today. It's just been going straight down. The system gave the sell signal. We broke below this this blue line right here, the 50 simple moving average on the 30-minute chart. The system I always talk about broke below that. If you would have shorted, you get fat gains. I mean, it broke below and it gapped down, broke, and it has just been sliding, just going straight down. I mean, we have had just 6 straight red candles on the hourly. High volume selling, mind you. And this is us bouncing right off of this trend line. Look at that. I told you guys this was the trend line of all trend lines. This is the ultimate trend line right here. Look at that. We're bouncing straight off of it. Big selling on it too. So actually not crazy volume on the S&P or on SPY on the one day. But I'm sure by close it will go up. So we still have another hour. It's 11:50 right now, or 3:50 for you East Coasters. 2:50. Math is hard. Looking at the Nasdaq. So the Nasdaq is kind of just step in step with the S&P. It's doing the exact same thing. It is not selling off more. It is not selling off less. It is just going straight down the line. But the main story about the day is Tesla, the one stock I fucking buy. I know. I tell you guys about the VIX where you should sell, and then I go in and I break my own rules and I lose money because of it. So lesson learned there. I ended up buying Tesla up here, and now we have gotten terrible news out of China that production is slowing down in China, and this is ultimately questioning the demand for Tesla. And now Tesla, their entire market cap is on the backbone that demand is just going to keep climbing and climbing and climbing for Tesla. They're projecting like 40% year over year growth in revenue, and they are completely valued on that. And if that ever comes into question, if there's any, hey, maybe demand isn't going up that high, then Tesla is just going to get destroyed. And that is really what's happening today. We're seeing some very high volume selling on Tesla. We are right on this here uptrend line, and I believe it looks like we're breaking it. But my stop loss is right here at 180. I think if we break below 180, or at least 179. If we see below that, I think Tesla's going next leg down, and I don't want to hold the bag through that. So that's a terrible loss for me personally. I really thought Tesla was looking good to the upside. It looked like we broke out of this falling wedge, but it turns out it was just a big fake out. And then it looked like on Friday we broke out of this bull flag. It looked like we had a perfect bull flag we broke out. Just a nasty fake out, and really not even a fake out, just unlucky, bad news. Really bad news came out for Tesla, and that's the stock market for you. You just never know. You never know what's going to happen. You never know when a bad headline is going to come out about your company, and it has been outperforming the entire market to the downside. It is just ripping the whole market down with it. We have Amazon. Amazon's down really bad too. Amazon looks like it wants its next leg lower. It looks like a good time to short Amazon, to be completely honest. Even though it's already, if you look at the daily, it's still like way at its low. It still looks like it has a lot of room to the downside. If you look over at Apple, Apple has been holding up pretty decently, but Apple tapped off of this trend line that I told you guys about. This trend line up here, it tapped off of that again today for the 1, 2, 3, 4, 5th time. And it looks like it is rejecting off of that very hard. I'm going to see where that one comes down to. I could see a bounce at 145.50 on Apple, if not 144.80. Looking at the Nasdaq levels, my Nasdaq chart is a complete nightmare. Sorry about this. But we are in the same little box. Let's see if I can take some of these trend lines. So we're in this box I was telling you guys about, this dynamic supply zone where we have been selling out of every time this year. We have sold out of it up here once, twice, thrice, 4 times. Now a 5th time it looks like we're selling out of this red box I got here. And yeah, it's just, it's not looking great. It's not super high volume, but this is just, it could be a fake out. It could be a bear trap. We could be getting more good news in the future. I'm not saying go short on everything. This is it. We're done. I'm just saying this is a alarming pullback. This is definitely a pullback that I was not expecting. And I think that bad news, that manufacturing news is a huge part of it. But on the Nasdaq, I would be looking for a bounce at 285.63. Or a bounce at 284.27. If we do end up coming down below 280 on the Nasdaq, I think that is like major alarm bells. Like we are going to see some big downside on the Nasdaq if we cannot hold up on that level. I do notice a little trend line right here. But yeah, 280 below that, and I think we're seeing some next leg down. We could just be in a trading range. I would not be shocked at all if we are just going to be stuck in a trading range on the Nasdaq between this 296 level and 280. That would not surprise me one little bit going into CPI and FOMC. We could just absolutely be in a trading range right now. So I do not think this is just going to be, we went straight up, so now we're just going to go straight down. I think we could just be in a range. We're going to bob and weave up and down in that range, and it could just be a complete trap for pre-CPI news, and it's anyone's guess what happens CPI. Anyone can you can flip a coin. That's the best way of knowing what's going to happen with CPI. It could be the worst news, it could be the best news. I would venture to guess it is going to be positive. We're going to get inflation coming down for the 2nd month in a row, and that would be very, very good. But we've had surprises. We have had times where it felt like inflation was finally coming down, and then all of a sudden it surprises and it's back up to the upside. So that's what I'm looking at. So looking at the S&P, same thing. We could just be in a trading range. We could be right in between 390, right in between 410, that $20 trading range on SPY. I would not be shocked at all if we just were stuck in that range. And yeah, that's really what I'm thinking that is going to happen going into the CPI news, because that's big news. And now FOMC, we've had words coming out of the mouths of some of the Federal Reserve Board governors about, hey, we might need to keep tightening higher than we thought. So they keep doing this. They keep going. All right, this is all we're gonna do. It's frustrating. It's very, very frustrating because the flip floppiness is just crazy. It's so crazy. They'll do this. They'll say, hey, target range, we're hoping for 5%. We think 5% is good. We'll stop there. So the market goes great, and then the market does the math, and it goes, all right, so that'll probably be 50 basis points in December, probably 25 in the next one, maybe 25 after that, and then we'll be done. And then Fed will have some inflation report, we'll get some unemployment numbers, Fed comes out and they say, hey, we're thinking maybe higher than what we thought before. So the market's like, okay, maybe 5.5%. So then we go December 50 basis points, and then the market just puts out this new map. All right, what's going to be the next one? And then they go, hey, maybe lower than that. We might be talking about slowing down since inflation's coming down. We might not have to go as much. We're afraid of over tightening. They'll come out and say that. So then the market goes, all right, so 50 basis points in December, maybe 25 in January, maybe nothing at the next one. Maybe they cut rates, and then it's mind-boggling. It's just no one knows what to think. They are so flip-floppy. They have changed their minds every turn, and the market is just here, just reacting like a little kid. I mean, it's so emotional, this stock market. It just reacts at anything, at any headline. Powell, I mean, you saw it when Powell was speaking last week. He basically came out and said everything we already know, and the market just went straight up. And it's just like, huh? What? But then you think, hey, is it just going straight up so the bears can just take control again and short the hell out of everything and make a shit ton of money? That has been the trend all year. But I still think we do see an end of the year rally, the Santa rally. If we do get good CPI numbers. If not, it could be a bloodbath into the rest of the year. I wouldn't be surprised if that happened either. So it's anyone's guess right now what's going to happen from a month down the line. I'm kind of just more looking at the short term. And right now at the short term, we have our sell signal on the SP 500. So when we get that, what the hell happened to my trading view? Okay. Okay. Good time for a trading view to poop the bed. Oh, there we go. It's back. So we got that sell signal, so that means the market can't go higher until we break back above this blue line, this 50 simple moving average. So that's really what to watch out for. Resistance right now is about at 402, 403 on the S&P 500. Hopefully we have support down here at 398. If not earlier than that, I would hope to see support on this uptrend line that we have right here around 397.50 or at least 398. But that's really where we're at right now. And I think we're just going to be stuck in a range. This has happened so often into CPI. We just get in a range, and then we get a crazy green day, and then we get back into a range, and then a crazy green day, and it just does that. And yeah, that's really where I'm at right now. Looking at stocks, looking at some semiconductors. Semiconductors are actually holding up decently, but AMD is looking like it's making kind of a triple top looking thing here, 1 2 3, and it looks like if it breaks below $70 really, if it breaks below that, I think AMD will head for another leg lower, because we are also bouncing off of this trend line, this big red trend line. This is our uptrend or our downtrend for the year. We are bouncing right off of that. You can see that we have bounced off of it. It tried to break it once, twice. It broke above it it broke above it on the third time, but that was a complete fake out, just a huge fake out, and now we're right back below it. So it's having a tough time. AMD is looking a little rough right now. I think semiconductors have had a crazy rally. Nvidia has had an insane rally, and look at Nvidia, it's running up to that trend line too. So this is really what I'm gathering when I look around the market. I'm just seeing a lot of things running up to those big downtrend lines, the yearly downtrend lines, and they're running right up to it, and they're hitting them and hitting a resistance, hitting big sell orders. Big sell order programs are kicking in as soon as it's hitting that trend line. And that's worrying. It's very worrying, because it makes me think, yeah, we're about to fucking bleed out. Oh, man, it's rough, man. I don't like it. Now that I look around, it does look rough. But yeah, just trade your plan. Don't try to guess what the market's going to do weeks from now or even next week. Just take it day to day. Today, the bears win. Tomorrow, it could just completely flip on its head and we go straight back up. You just never know. You just got to have your levels, trade your plan. And yeah, that's all I got for you folks. If anything, take from this video that I don't think the market heads any higher until we at least break back above we get that buy signal on the S&P, which is up here at 4040 on the on SPX, and it's up here at 403 on SPY. So that's the message I would take from this video, is that we're probably heading lower until we break back above that. So thanks for watching, folks. I appreciate y'all. Drop a sub if you're not subbed. Drop a comment, a like, please. I enjoy hearing from the viewers if there are any. And yeah, thanks for watching. I'll catch you guys later.